My name is Koketso Chipane. I'm an equity derivative specialist from our capital markets team. And I'm just standing here to introduce our speaker for tonight, Singer from Vunani Private Clients, one of our very most valued clients. He's going to shed some light on how to read financial results like a pro, which is, I think, a subject that a lot of us take for granted, but it's very important. So without wasting any time, I'm going to call over Singer to present for us. Thank you.
Thanks, Koketso. Good evening, ladies and gentlemen. Thanks for coming through to this presentation. All right. Today we're doing how to read results like a veteran in the market. The purpose of this presentation is to not really turn you into a guru overnight, but to really try and accommodate everyone who at different levels in terms of their knowledge of the market. This is just like a guideline on the checklist that people who watch the market normally look at to scan through the results of a company and get a feel of how it would perhaps perform on a day that it drops their results, where you as a trader could perhaps take a position, be long or short. If you've scanned through our checklist, you should get a sort of good sense and measurement of how the share could trade on the day. So let's get on with it. So this is basically context. We've segmented this checklist with steps. It's step 1 to 5 to 10 actually. Step 1 is really how to decipher previous reporting results. Step 2, what company revenue tells you, and so forth. But I'll go through the steps individually. So step 1, how to decipher previous reporting results. Now, this is when you go to the last reporting period of the company. You can look at the trading statement, or you can look at the company annual results. Just you jump straight to the chairman's letter. Normally, the chairman would write a letter to give an indication of how the company is doing and also what their objectives are. So when you look at, for example, now we are in October, our reporting season starts again in November. Our last reporting season was between June and August. So you could first go into the August results and see what sort of objectives, what sort of guideline did management give, and see if have they achieved that in the current results. I think that's a good starting point. So that's basically what I've just said now. Has the company met its previous objectives? You'll find this information in the trading statements and annual reports and chairman's letters to shareholders. This really set the scenes for the current results that you are looking at. If for example none of the objectives were met, then you will immediately get an indication what sort of results you're looking at, because here you're trying to scan through results without reading the entire 400-page document to get the sense of how the share will trade on the day it drops results. So key takeaway here is if company previous guidance was met, then you can be confident that you can be confident about the management's ability to meet future expectations. That shows you that previous strategies have worked, and that gives credence to the current results. And also the opposite is true, So that's I think that's our first checklist you should take note of.